How's everybody doing today? So I go by the name PE ratio, and today I'm going to cover stock market statistics, like the 52-week high and stuff like that. So this is not investment advice. This is educate for educational purposes only, to help you all navigate this the stock market. So we're gonna start with Yahoo today. Bear with me, I got allergies. So let me share my screen. So this company, right? Okay, let's share my screen. So this company, I was researching it a little while ago. It's called ARM Holdings. Let me go back so you can see it. One second. So this is the name of the company, ARM Holdings PLC. ARM. This is the ticker symbol. So the ticker symbol is always an abbreviation of the company. Let me. So we're going to cover these right here: previous close, open, and what they mean when you buy the stocks. Let me 1 second. So here we go. So of course this is a graph, and I'll probably cover that a little later. But my main goal is to tackle these right here. So when you come to www.finance.yahoo.com, and you come to summary, or first you'll type in the ticker symbol of a company. So if it was Apple, you type in for the ticker symbol right here. It says search for news, symbols, or companies. You'll put AAPL, and I think that's Apple's ticker symbol. So we're gonna start with previous close. So at the end of the day, they're saying that this is the what it closed at the end of the day. What the stock closed at $143.92. This is what it opened at. So at the beginning of the day, well, the stock market opens 9:30 a.m. Eastern time, Monday through Friday. So 9:30 a.m. Eastern time, this stock opened at $143. I mean, $146.00. $143.03. Sorry about that. Now, the bid and the ask. Now, this is for options contracts. This is a little bit more advanced, so I won't be covering this too much, but I will tell you what the bid and the ask is. So they're showing this is $155 and 45 cents times 100 shares is option contracts. So the bid is for um, the the bid is for the buyer. Okay, the buyers saying they want to pay $155.45. The ask is the seller. So the seller saying, "Well, I'm selling it for $155.65." So they're penny pinching, but I mean that adds up when you're buying a billion of these, like large people who have a lot of money, billions of dollars. When they buy stocks, they buy a bunch of these. So they buy maybe 10,000 shares. So that 20 cents times 10,000, and I always have a calculator. I would tell everybody else to use a calculator, but we'll do that math later. It adds up. So we're gonna go to days range. So they're saying today this stock was in this range. It was at $145.20, and it went all the way up to $158.71. Wow. This is a semiconductor stock, so it's in the semiconductors industry or sector. So when you listen to the stock market financial channels, they will say the semis is up. Semis is up. So that's a stock market lingo for the semiconductor sector is up. And companies that's in the semiconductor are NVIDIA, ARM, AMD, Advanced Micro Devices. These are companies that make microchips, these chips. And you can find chips like when you're in your car and you're backing up and stuff like that, all that stuff, the little semiconductor chips that's in the breadboard of your car, all that stuff that's communicating with each other, like computers. Computers is a main example. They have when you open up your computer and you see the breadboard, it's a bunch of semiconductor chips. Same computers are in the car, similar. So without them, we already know you won't have your nice vehicles that are able to do all these fancy things in your car. But let's keep going. Wow. So the day's range was $145.20, and it went all the way up to $158.71. Wow, that's a big. That's about 13 bucks and some change. $13.51 to be exact. So wow, I don't know what was going on with that stock, but I seen it up today. But invest for the long term. That's all I'm going to say for right now. 52-week range. So 52 weeks ago, this stock was $46.50. Wow, you can't catch every stock. I do wish I had it, but I got other companies like AMD, Advanced Micro Devices. One of my best companies right now is Apple. I have 160 shares, and a company called uh, CrowdStrike, CrowdStrike Holdings. I got into that stock at $80 a share. Right now, it's trading at $380. So got quite a bit of shares. I bought the stock back in 2020. It's a cybersecurity stock. Okay. So here we're going to go to 52-week range, like we say. So as I covered this already, within the 52 weeks, which is a year, this stock has ranged from $46.50 to $164. That's a that's a big that's a large percentage. So what I want to say to you is this is a percentage game. So I'm gonna do the percentage on that. Bear with me. So how you do percentage is we're gonna take the initial. Let's say you was invested in this company and you got in at $46.50. That would be your. Let's just say you buy one stock. We're gonna keep it simple. So that $46.50. Keep my calculator minus. That's your initial investment. $46.50. We're keeping it simple. So you would minus that. So 46.50 minus $164. Okay. Well, just 164. Um, so of course you're going to get a negative, but don't worry about the negative. Just you can cancel that out. So you got negative $117 in. I mean, 117.5. I'm just going to give you what the percentage is. So how you find percentages? You take $46.50 minus 164. Okay, and it said equals. Once you get the equals, you would. This is the difference. So you would divide the difference by your initial investment. So the difference was 117.5 divided by your initial investment, which is $46.50. I got negative 2.52. Remember, you have to multiply that number by 100 to get percentage, or move it two decimal places to the right. So I'm going to multiply it by 100. So you got negative 252.688. And remember, just that negative is just do away with it. That's a 252.68% return on your money. Okay. So just let that marinate. Okay. 20, 252. Just let that marinate. That's over 200%. So if you put in something like $1,000, that would be uh, that would be 2,000, um, 2,500. I'll do the math later, but that's profit plus your initial deposit, which is, you know, so let's say that. And I think I'm gonna cover a percentage. I'm gonna do a video on percentages by itself. That's wonderful. That's beautiful. Let's keep going. So now you have, and again, I got allergies, so bear with me. Now you have the volume. The volume is the amount of people that bought or sold this stock today. So volume, this is today. And I'm about to give you some gold. This is gold right here. Always remember this. So this is the daily volume. This is 16, um, no, Lord, that's 16 million. Okay. So 16,985,704 people bought and sold this stock, whether they're buying and selling. Remember, the more buyers you have, the stock go up. The more sellers you have, the stock go down. Okay. Now you have average volume. So this is the average volume, and this is based on a 52-week or 1 year. Um, this is based on 1 year. So whenever you see this daily volume jump over the average volume for the year, and the stock is up, that means people are buying that. People see it's going up. People are more sellers than buy. I mean, there are more buyers than sellers. So you can see why the stock was straight had this big price swing today. Okay. Yeah, I always look at this when if the stock is down and you got and the daily volume is over the average volume, then that would mean um, there's more sellers than buyers. But this is green today, so yay for whoever owns this company. Market cap intraday. So the market cap of this company is $163 billion. Okay, 163 billion. That's a lot of money. Uh, I'll tell you how to find market cap later. Uh, I'm just covering this right now. That's the total market capitalization of the company. I think you would do the outstanding shares. That means all the shares that the company has multiplied by the stock price. I think that's how you get that number, if I'm not mistaken. Okay. Beta. This is another one. Uh, Beta has to do with volatility of the stock compared to the overall market. So this is this is how volatile the stock is. So if you're a person that doesn't like a lot of risk, or you're a person that can't sleep at night when you see large price movements, you will want to have a beta under one. Here they don't have a beta. I don't know why. This is rare. Usually companies have a beta, so it would say zero point 0.8 or whatever. So anything under one doesn't doesn't it doesn't have large price swings down or up. And if you're a person that can't take a lot of risk and get kind of like don't feel good when your stock drops so much, then you want to have a stock with low beta. Okay. PE ratio. How you get this number? This is the stock price divided by the earnings per share, which is this earnings per share is this right here. So whatever the stock is trading at, you would take that number, put it in the numerator. You would take this number, earnings per share, EPS, and divide it by 0.29, and you get this number, the PE ratio. That's pretty high. That's very high. And the reason why investors are buying this company is because it's a growth stock. Growth stock, value stock. Growth stock is just a new upcoming company that is beating its peers in the same industry or sector that has more market share than its peers and making more money. So That's a growth stock, and that's why investors remember there are two things that move the stock market. There's information. That's why when you hear the earnings come out, that's information. Oh, it beat earnings. Okay, and the second one is expectations, information and expectations. So when you got these two, information and expectation. Those move the stock market. So they expect the company to do good things because it's a growth company. Okay. Um, Now I'm winding down with this. Now you got earnings per share. This is how much a company makes off of each share it has. That's what this is. Earnings date. This when the company has earnings call, and they don't have it here because they don't know when the company is going to have its earnings call. Earnings calls are quarterly. We just had one last week or the week before, so and so. Then you got forward dividend and yield. This is if the company had a dividend, it would say this. Ex dividend date. This is when you can get into this is the last date to get into that company. They don't have it here. 1 year target estimate. This is what a analyst would say. Okay, this is the target that we're looking for. So that's it, guys. I hope y'all enjoyed this and have a nice day.